Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So as you know, today is Tuesday, so we'll be expecting to have a bit of more volatility in the markets. So I remember yesterday mentioning that we had a public holiday in the UK due to the King's coronation. And as a result of that, the European markets were largely quiet. We did not have any major moves, and the markets were largely trading sideways. So today, the market is back in full impact. So we'll be expecting a lot of volatility, even though the economic calendar seems really quiet. So I would like to begin by focusing on the economic calendar before we move on to anything else. So I'm hoping that everyone can see this. So from the economic calendar, you can see there is quite a number of announcements happening today, ranging from BRC retail sales monitor in the UK, average earnings in Japan, household spendings in Japan. So it's a little bit seeing the average cash earnings up 0.8%, which makes the expectations of 1%. Remember, one of the major policies for Japan is to basically maintain an rapid growth in earnings. So they're looking to achieve that and also have a healthy inflation. But this is so far missing target. Household spending is also really weak in Japan. Australian sales 0.4%. Chinese trade balance improved to 618 billion. Whereas US denominated trade balance also improved to $20 billion. So looking at other data points, we have the Japanese 10-year bond auction, the Halifax HPI, or basically the housing price index for the UK, and the French trade balance. So these are low impact news. We don't expect a lot of volatility coming from these unless something substantial comes from the speech by FOMC member Jefferson at 3:30 p.m. and also FOMC member Williams at 7:05 p.m. So clearly, it's a very quiet day. We don't expect any major announcements for the day, which means that technical analysis takes the day. So when it's technical analysis, for those who are new to the sessions, we should know that we have done a full course, beginner course. It's called Novice to Pro. It's all on the FX Pesa YouTube channel. So you go to the channel, you'll check out the entire course. It's 10 episodes ranging from introduction through to fundamental analysis, risk management, and all that. So for technical analysis, basically studying price action or past price history in order to speculate on future price movement. And we have quite a number of setups that are largely being expected for the day. So one of the key highlights for the day is the FTSE, or basically the UK 100 index, which managed to rally very well on Friday before trading sideways. So we saw it made some good rally Friday. Yesterday, the market was major trading sideways, and today we have a big sell-off for the last 3 hours. So this is a clear indication that there was some form of rejection. So if you think of this as a flag, then it would be pretty simple. We would acknowledge a long bullish momentum here as our flagpole, and the consolidation here as the flag itself. And I would put a trend line along this area here, and perhaps another one along this area. And clearly you can see the break, retest, and continuation. So it's an indication that the market is changing direction. So we also saw something similar happening with other indices. For instance, the Dow Jones Index made a historic rejection of this price level of 33,771. And once it hit here, there was a sharp drop. And today it seems to be attempting to continue further downwards. So if the US Tech 100 or NASDAQ, yes, there's a major resistance level here that the market was attempting to break yesterday in the evening, but failed to break, and now it seems to be going downwards. And also for the US 500 or the S&P 500, you can see the major area here being attempted to break quite a number of times. And also the price action in the last 2 hours is clearly indicative of an attempt to move further downwards. So one of the reasons we could create this is the US dollar index, which we speculated yesterday that it had already hit a bottom. There was just too many points reaching this support level of around 100.8. So yesterday we managed to see a very good bounce. The market rallied all the way up. So today at the market open, you can see there was a small jump, there was a small gap here. The market pulled back up and moved even higher. So here we are seeing the resilience of the dollar making a strong comeback after the recent stuff here. And now with a strong dollar, it makes sense to trade the other currencies in line. So for instance, for pound USD, you can see how the strong dollar is attempting to push prices back down. New Zealand USD, this one seems to be pretty strong. The strength of the dollar hasn't had such a huge impact, basically indicating there's a very strong momentum in the New Zealand dollar. So yesterday, a major resistance was broken here. And after breaking, we moved higher, but we didn't quite get to the extreme price of the previous high, which is around 0.63791. So perhaps some further upside to complete the entire cycle before market pulls downwards, or even it breaks just right away. USD, very interesting take here. So what we are seeing here is a market that has been consolidating in this rising wedge. So on the 4-hour chart, this is how it looks like. So a market that has been swinging along this trend line for quite a period now, and also the upper trend line for quite a period now. So as you all know, the more level has been tested, the higher the chances that that level will eventually be broken. So in this case, we were expecting that this upswing would continue yesterday, but what we saw is the euro being weak to the dollar and the price reversing further downwards. And this morning, you can see the attempt to move even down further. And now in the last 1 hour candlestick, it's an attempt to break to the lower side. So if you are to get very precise on this one, I would adjust my trend line somewhere here. And now I would say that it's trading at a critical point, which is a major support level considering yesterday's lows. So this was Friday's lows. So we could be seeing the Euro USD bounce from here, but also on the other hand, break lower is still in the books. So nothing to worry about. It's just a wait and see kind of situation. So we just have to monitor the most recent highs and lows. So I would say here seems like a nice target. So potentially, if you observe a strong entry by buyers, then it could be testing yesterday's highs. And also if there's a break, then this previous low might be very instrumental in setting a target for Euro USD. So it's all about observing the current price level because it's a key price level to see what happens. If there's a strong entry by sellers, then go down. If there's a strong entry by buyers, then we go way up. So as for USD CAD, there was a big sell-off that kept continuing up until we got to a support level yesterday. So we were expecting that the price would bounce around this support level here, 1.33045. If you look at the end of the bodies here, that is the candlestick bodies and the tails, then you notice one observation. And the observation is that this was also instrumental as a support level. So judging by the candlestick that we saw yesterday on the 4-hour chart, it's very clear that it's a strong rejection. It's a book pattern. We normally call it the bullish engulfing. And since then, the dollar has been quite resilient. So some expectations on the upper side might be in order. So from the H1 chart, we could be expecting 1.34113 to be a nice target, which was previously acting as a support level. Trying to find the price level here. Yes, from the bookings, you can see it was at the support level here, and now potentially might be acting as a resistance level. So we could be seeing the US dollar make another rally against the Canadian dollar and eventually get to 1.34113. So USD JPY was expected to bounce from 1.3.123. Didn't quite get there, made it a strong case for a rejection of prices. Since then, the dollar has remained strong. This was Friday. But then from yesterday's price action, what we are seeing here is more or less of some form of bullish flag. So we can all see from the 15-minute chart that this is what the market is forming, more or less like a loudspeaker or a horn. And now it's all about observing and waiting for the trigger movement, which might be indicative of the strength of the dollar or even so a break of either of the two trend lines might give us a direction. So as for gold, it managed to make a very strong bounce off the 2000 price level. So this is how it rejected the 2000 price level here. Also, we remember that last week we had an all-time high in gold where it hit 2008 per ounce. So since then, there has been quite a strong bounce. And yesterday there was a continuation to push even higher. We didn't quite get to our target of 2031, which means that we wait, and the potential to 2031 keeps getting stronger, as this was a major support level. So at this point here, it was a support. And if you go a step backwards and look at the previous charts, then you notice that also at this point, it once acted as a major resistance level. So for intraday trades, it might make sense to use that as a very short-term target. So it's also the key price level for the day. So when gold hits 2031, then we're observing to see whether there is a break and maybe towards 2048. But then if it's a weakness as a result of the strong dollar, then we could be going back to 2040 and also 2005. So potentially this area here, and also if there is a strength of the dollar, then this area and also 2005 being a target. So for EURUSD, it's making some good and impressive pullback as a result of the strong dollar we are seeing in the market. So this one is to complete the cycle. You can see the resistance here and the resistance here. Also, the candlestick on the 4-hour chart is clearly indicative of a rejection of higher prices. So it's a common pattern. You may not have heard of it. We call these piercing pattern. So if you search piercing pattern, then you understand the dynamics of this pattern. It's a very good indicator of, and since then you can see it's moving far back downwards. So as you whenever we have this kind of U-shaped pattern, then it's very common to expect up and a handle pattern. This would be the cap and then the handle somewhere around here. Price pulling back shortly and then getting back to the same resistance. So as for now, it remains bearish. So especially some further downside. So 0.67371 might be our next target. So the most interesting chart yesterday was UK oil. So you are speculating price will get to 77.93. It missed by a couple pips before pulling back downwards. But then the US dollar is very strong today. So some further towards 5.4 is expected for the day, but overall and long term expect. Sorry for that. So overall and long term, I expect the US dollar to be pretty strong. So as we proceed with the session, you should know that tomorrow is a high impact news day. So whereas the market will be observing the technicals, we could be seeing some speculation about the outcome of the news tomorrow. With that in mind, it's very important to understand what we're expecting tomorrow. And we will be expecting German final CPI. This may not move the markets much, but then US CPI is a major market mover. So as we've been saying over the year, since last year, is that CPI is the new NFP. So back in the day, Fed used to hold jobs market data as most important data in their decision making. The problem they were trying to solve is employment in the US. But then, since the US already achieved full employment, we know that last Friday, the data that came in was stronger than expected, and unemployment dropped to 3.4%, which is basically a 40-year low. So with that, we know that the sole focus of the US bank is to control inflation and push it back to target. So it has been doing really well since peaking at 9.1% in June last year. So in the last reading, it was 5.0%. And also in the last Fed meeting, the interest rates by 26 points eventually pushed interest rates to 5.25%. So with this in mind, we will be observing this keenly, because if there is a spike in inflation, then that means the Fed has to do a little bit more in order to control the inflation back to the 2% target. a spike above 5% inflation would be very positive for the dollar and very negative for equities, and a drop below 5% would mean that the Fed could go easy on rates, and in that case, it would be negative for the dollar and positive for equities. So we might be seeing investors speculating on this from today. So speculation or anticipation of news could be priced today. So expect some volatility, especially New York session. So that's it for today. Thank you very much, everyone. I think the talk of the day today will be about Janet Yellen, who is the U.S. Treasury Secretary. She's very worried about the U.S. debt ceiling. And last month, she basically indicated that if the U.S. doesn't adjust the debt ceiling, then the U.S. could default on its debt by the 1st of June. So with this in mind, we know that there's a lot of pressure on Congress to change the debt ceiling law and push it a little bit further higher. And if they don't do that, then a crisis will be looming, and it's becoming quite a political issue, but also the market is concerned, which could be a major stimulant for the movement of gold this week until this is passed. So thank you very much, guys. Thank you for your time, and I hope to see you on the next one. What sent the Australian dollar and New Zealand dollar tanking in the morning? I don't have an explanation. The only clear explanation I have is that the dollar index is really strong. So with a very strong dollar, means that all these major currencies are going to be experiencing some retracement as a result of the strong dollar. Gold headed to 2030. As I said, the bank stops with the Fed, and one of the key indicators is the CPI. So the CPI data will be very influential in the direction that gold takes. So if there's a spike in inflation, then that might be the indication that gold is headed even higher. Please explain how oil price is a dollar index, as it does not comprise a part of the index. We all know that when you're trading oil, it's basically a pair, just like any other currency. So on one side, oil is the base currency, and the US dollar is the quote currency. You are looking at the price of one barrel US dollars. So if there's any change in the value of the US dollar, then it basically affects the price of oil. So if the dollar is strengthening, then oil tends to go down. And if the dollar is really weak, then oil prices tend to go up. There's a request on BTC and Binance story to patane pale attendees. In which time frames do you scout for exit? Say you are a day trader. 50 minutes to 1 hour. It tends to be perfect for me. I don't know what would work for you. There's a support and resistance. So as I did a full episode on support and resistance in the novice to pro series. After this particular session, just go to FX Pesa YouTube, look for the novice to pro series, search for the episode that covers technical analysis. I have that answered in a full hour episode. So thank you, guys. See you on the next one. What fundamental risks can you ride on gold sells? Gold sells strong dollar as a result of a big spike in US CPI. So if there's a big spike in US CPI, we'll see a strong dollar with gold. If there's a in CPI significantly, then you'll be seeing a weak dollar, but a very strong gold.